If you invest in the UK, you should feel very, very uncomfortable. No, seriously. Over the past decades, the S&P 500 has consistently shown stronger returns compared to the FTSE 100. And since 2008, the gap has just grown wider. The S&P 500's growth rate has been 6 times higher that compared to the FTSE, for example. And it gets worse when you zoom out and look at the previous 4 decades. The FTSE 100 has only outperformed the S&P 500 in 10 of the last 40 years when we're looking at these results, which is quite literally once every 4 years we see the FTSE outperform the S&P 500. So the real question is, why is the UK's performance so bad when you compare it to the S&P 500, and will it always be like this moving forward? Because if you're investing from the UK, it isn't just an interest. This is showing you exactly where your hard-earned money is going longer term moving forward. So it's very, very important that we understand the reason. So in today's video, we'll be discussing the performance gap of the FTSE 100 and the S&P 500 and whether the FTSE is undervalued or fundamentally broken. Now, a lot of people say that the FTSE 100 is stuck in the old economy because it's dominated by traditional sectors like finance, energy, and mining, fueling those returns. And when we look at the performance of the S&P 500, we can see that it's dominated by tech giants like Apple, Amazon, Microsoft, Google as an example, and these growth companies fuel the growth for that specific index. Everybody uses one of these products directly or indirectly, and that predominantly fuels the growth. Now, technology weighting in the S&P 500 increased from 11% to 27% from the years 2016 to 2020, whereas when we look at that compared to the FTSE 100, there is only a 2.6% weighting of tech within that index. This quite literally means the UK almost missed out on the revolution of technology during those time periods. Now, could this be something that is culturally embedded within the UK? Because even if we're looking at startups and VCs, most of the companies get funded are based in the US, and we're even seeing smaller startups move in terms of headquartered, move from the UK to the US to areas like Silicon Valley to build out their relationships and raise money. So it's happening from the ground level all the way up to large companies that are IPOing, and companies are always going to be incentivized to be surrounded by people that are thinking like-minded to them. And if you're looking at the UK, you could argue that, especially within technology, that there isn't that culture like there is over in the US, especially with investors like VCs and other companies growing at a similar speed to them. However, with that being said, if you're an investor that is focused on receiving dividends and sustainable income, almost passive income from stocks you invested in, then you could argue that the FTSE 100 is a fantastic place for that, because the culture is more focused on paying out dividends to shareholders and growing that dividend amount rather than reinvesting back into the company to essentially accelerate growth. Whereas when you're looking at it from the S&P 500 and the US perspective, they're much more focused on growth. So buying back their shares, investing into the company, investing into infrastructure to really fuel growth and essentially become a better company than yesterday. So it depends on what you're looking for. For example, I can only speak for myself, but I'm more focused on that growth. So that's why I'd rather a company buy back their own shares rather than pay a dividend. But it might be different for you watching this video as an example. And we can see this by the figures that are being paid out. As we can see, on average, the FTSE 100 has a yield of around 3.9%, whereas the S&P 500 pays an average dividend of 1.1%, which is considerably lower than the FTSE. Now, who doesn't like a discount on something that you're already going to buy in the first place? And that includes stocks. And if you put your eyeballs onto the UK, you could argue that most of the companies are trading at a discount compared to those based in the US. And this is true for many other European companies and indexes as well. But although the UK has been perceived as cheap doesn't necessarily mean good. It doesn't necessarily mean valuable, as if there are structural problems within the companies, this will effectively affect the share price for the long term. So it's something to definitely take a look at. And we can look at this by looking at the market cap, whereas the FTSE 100 market cap is around 2 trillion compared to that of the S&P 500, which is around $45 trillion, making the S&P 500 17 times that of the FTSE 100. So it just goes to show the sheer difference in markets and growth. Now, while all this is true, we have seen a complete shift in mentality, specifically during 2025, which is pretty crazy when you think about it. We can see that the script has completely flipped as the FTSE 100 outperformed the S&P 500 in 2025, rallying 21% year to date compared to that of the S&P 500 at 17%. And it's crazy because it's not your usual suspects. The main drivers for these returns are companies in the mining space as well as companies in the financial space, all based in the UK. And we can see that the capital had shifted from the US into the UK. So it shows that the UK's lack of tech wasn't a hindrance or a burden for the UK this moment in time. And as we continue to see perceived risk based in the US, it's likely that money will continue to flow into indexes based in the UK and wider Europe. So it'll be interesting to see at the end of the year if this momentum within the UK can continue, which would be great to see nevertheless. And maybe you're thinking, why is this a theme? Why will this potentially continue into 2026? And this is because of the Sell America trade that is happening. As mentioned, we're seeing money move away from the US into other safer haven spots, and the UK is being perceived as one of them. And even when you're looking back from when Trump announced the Liberation Day, we could see investors starting to pull money out of the US into other assets as well, which is, well, a great thing for the UK nevertheless. But it'll be interesting to see because, as we know, Trump, he can say one thing and then do the other, and this could almost change within the next few weeks or few days, so to speak. You just never know what will happen. So it's always important just to keep up to date on the stories that we've seen to really be plugged into the sentiment. So when you're making your decisions, you're really informed with the knowledge that is out there, so you'll have a bird's eye view of what's going on. But again, that is it for the video, guys. Let me know in the comments below if you think the whole Sell America trade will happen and what you guys have been doing if you've been investing into the market. So yes, leave me a like if you found this enjoyable, subscribe if you're new, and I'll see you on the next one.